chart the markets with our good friends from FEG Token and smartdefi.com. And of course, our exchange partners, BYDFi. And a link to BitFi is available in both my X profile and at Blunhouse TA on YouTube. Now, let's kind of kick off our day here because a lot has happened since Thursday. We have kind of gone on to make new highs in Bitcoin, somewhere in the neighborhood of, where did we hit? 123.3, and you closed that around, in and around 120, maybe just shy of it, at least on this chart. But nevertheless, price go up. And, as we continue to look at these charts over time, you can start to see or appreciate how time can really, really get in the way or interfere with decision making, because, we're human beings and we can become impatient by nature, right? And we kind of walked through the 4-hour Bitcoin chart, which felt like forever as it broke, which was once resistance and now will become support, right? And we don't want to talk that it was way back in May that whole process started, right? And the time sometimes gets in the way of your analysis, because all you want to do is put money into play. And sometimes the best trades are the ones you don't make, right? So that's why we kind of pay the insurance and make sure that when we do take the trade, and, coming out of this 4-hour chop on Bitcoin, you finally did get a signal, one that stuck, excuse me. And that's the one that rode all the way up higher, right? And even through these, 2-3 days of sideways trading, you never broke trend, right? What we use to measure trend, the 5 EMA and the T line, which is the 8 EMA, the divergence between those two levels was still there, right? So it was just a matter of being patient. And even when we were going sideways on the 4-hour, in and around that area that had proven to been pretty reasonable resistance, the divergence, though, was still intact. And as long as that divergence was intact, you could feel comfortable that the trend was your friend. And that's really what we're trying to do. Make the trend your friend, or not make it your friend, at least make it identifiable to you so that it can become your friend. And, here we move on to today. And we've softened a little bit, but I think everyone expected once you got into the 120s, you would probably fade a touch. And of course, we have. Does anything change just because Bitcoin made an all-time high? Does it change how we read the chart? No. Could we identify a top? By this time, I would hope so. Did we get too far away from the 5 EMA and the T line? Yeah, a little bit. Do we know what happens when that takes place, that you come back to it? Uh-huh. And our 5 EMA started to sense the fade quite early, right up at the top, actually. And you would have had lots of warning that this thing was going to take a little bit of a breath. Have an impulse candle down, close below the T line. You go sideways back to the T line, and down you go again. So it was all there for us, no matter if it was an all-time high or not, that we were moving down. And then you get your signal. And still, right now, we have not closed, or not broken, rather, the 5 EMA. We're still in a downtrend, according to how we read that. Do we have any idea of where price might want to go? Kind of. We do. What do you see to the right of your screen? One big volume gap. And that volume gap is like a vacuum for price if it gets into it. Right now, price is sitting on a shelf. That's what this is here on your volume profile. That shelf was created through the left here, where you have this sideways bench of price. It creates that little bit of a ledge. That's what price is sitting on now. What happens if you fall off the shelf? You fall right into... Oh boy, do we have someone who's having fun today.
Fuck your mother, father.
1 second, I got you guys. I'll be all right. They're good. They're gone.
Yeah, I took them out of there.
Oh man, are they okay? Everybody okay? So nevertheless, what happens? Price is going to fall into this gap. And what would be a draw for price? How about previous resistance, which would be now support? And here you have your upper value range down here, which would be also a target. So as long as we have this downtrend that's intact, and we're just using a simple volume profile to identify where price has and hasn't spent a lot of time, because we know these big gaps will create opportunities for us on the way down. And if price was on the way up, then it would be vice versa. Right? So there's nothing really too amazing that we're doing here. We're not pulling rabbits out of hats, or there's no crystal ball. This is just a weekly chart of Bitcoin. Right? Probably, you know, one of the cleaner uptrends you're going to see. It's pretty well organized too. You know, move higher, retracements, move higher, retracements. And here's our area that was once resistance, sitting right just above the T line on the weekly. And this candle here, although we still have lots of time, it's only Tuesday, but this candle here is looking like it may want to come back and check the 5 EMA and or the T line right in and around the neighborhood where that previous resistance was. And it's all fairly logical, right? And it's just sensing and, you know, making friends with the ebb and flow of how money is moving. Again, the job is not to front run the chart. Your chart is a treasure map, and it's meant to be followed. And that little tiny bit, which seems like a lot at the beginning, that you miss to make sure that you make a safe trade is just simply insurance, so that you can be on the right side of the trade from the beginning. So when a lot of you reach out to me outside of the streams, that seems to be one of the challenges, is getting into trades at the right time and getting out at the right time, right? And being patient enough to pay the insurance. So don't front run, just follow. In the simplest of terms, just follow the chart. This would be an hourly. It's pretty easy to follow this chart. Now, if you really wanted to jump in early, we've now given you the ability to sense when that might be happening, although there's some risk of taking the trade up here because it's not confirmed based on how we typically measure a confirmation, or at least I do. But now, at least I have risks that I can kind of calculate. It's a calculated risk. If I do take a short up here, I have to have a tight stop because it's not confirmed, but my shorter time frame is sensing the fade. So there's lots of opportunities. I'm just following. Like, even if we front run here, we have a little bit of insurance that stuff's going to go our way. If it doesn't, we're out right away. Okay? just follow, and I know we were kind of talking about this before we came online, is that sometimes, and this happens to me too, happens to all of us, we start to overanalyze. We have a lot going on our charts. We're feeling comfortable with all our indicators, and then all of a sudden we start tripping over ourselves. And when that happens, just take a step back, strip the chart, try and keep it as simple as possible and as clean as possible, and take out the noise. So my trade's based on 3 things: fibs, fractals, and filters. Pretty simple when you start to break it down. What do the fibs do for you on a chart like this? Well, kind of gives me a bit of a target on the way up. Just add some clarity to the chart. That's all. Where might price go? Well, 618 is always a number that we like to use for proven reasons over time. Where does that level sit? Right up at the bottom of that volume. I'm going to call that the gap, actually, because the shelf is out here. So it really sits inside that gap. And if it wants to move higher, once it gets in there, there's not a lot of resistance for it. Pretty simple stuff, right? I didn't go to MIT, we don't go to MIT to learn how to use fibs, right? Fractals, well, we're looking at a 1-hour chart because we use time frames to see what's going on inside the current time frame that we're looking at. How do I see what's going on in here? Well, we just either break it down into a 30-minute candle or a 15. It's just like the nesting dolls. You open up the monthly chart, inside is the weekly, and so on and so on and so on. Here's a real good example of how our script can help. Right, so impulse down, finally got back to the 5 EMA, and it's on the 15-minute, and then the money comes in, as shown by this candle here, and it triggers that 5 EMA right away to go from red to white. So that's an impulse move. Right? So we have, here's our confirmation 2 candles later. But we could have safely taken that trade even there. And here we go, right? That's what we're looking for. Watch how price moves into these gaps. What is it going to do? It wants to take out the previous wave's high. And it's not an accident that this previous wave's high is basically the same level as this bench of past price to the left. Right? That's the price resistance. This candle wants to take this out. And when it does, it's going to look for previous wave's high, which is way up here. And how does it get there? Well, it shoots into this volume gap, PDQ. Right? And this is what trading is all about, but it doesn't have to be super hard. What makes it super hard quite often is ourselves. And I'm no exception. I've done it to myself too. Overthought things. Our good friend Carp says, give me a minute while I overthink this. I can do that really well. Okay. And I know others can too. It's not just me. So if I don't have as much on the chart to overthink with, maybe that's better. Handful of things that are just showing me where price has been and has been not, when money is leaving and when money's coming back in. And then we just go by levels and we filter out the noise. So fibs, fractals, and filters. And the filters are things, quite simply, the easiest one would be what we use as the 5 EMA and the T-line. Because what is it doing for us? Well, it's filtering out all of that nonsense At least this is the takeaway, okay? It's filtering out all of the nonsense. The nonsense is the BS intraday trading that rock and rolls all over the place. And if you're chart watching too much, too long, you'll start to overthink your trade based on all the volatility that you're looking at, on all the different time frames that you've decided to look at. Right? If you make a trade on the 1 hour, don't venture too far back and too far forward. That isn't necessary. And when I say that, I mean, are you supposed to be looking forward and backwards? Yeah, sure. But don't get lost in the weeds, right? Here's your signal, guys. You take your signal, you get the divergence between the T line and the 5 EMA. The 5 EMA is white, so you know there's money coming in and price goes up. You're filtering out all of this nonsense. You know, you have like 3 or 4 really strong candles, and then all of a sudden you get 2 red ones and you start to panic. When in reality is all that was happening. This price was moving sideways back to the T line and or the 5 EMA, and then it pops again. And how did you know it was going to move higher? Because the divergence between those two was still intact. And up it goes. Twisting around, obviously sideways. We don't want to trade that. We're just waiting for the breakout and the breakdown. That's the stuff we really want to trade. And do you get signals in the chop? Yeah, because your T line and your 5 EMA are so tight that they're going to roll together. And even with the filters going on in the background, you're still going to get the odd fake signal. But even on this hourly chart, with a little bit of lev, they were tradable. Right? They were tradable. But this is the one that you really want, right? The one that shows you that it wants to run. And how does it show us? Well, quite simply, we are looking for the divergence to the upside. That's all we want. That's how we know that we're in right. And even the red candles that you see are simply red candles in an uptrend. And we know it's an uptrend because the T line and the 5 EMA are still apart. Right? All this wiki nonsense still kept you in the trade. Still no sell signal. Not till there. So it's all you have to do. Now, I find since we've altered our script a little bit and give the 5 EMA the ability to sense the fade with money coming in and money coming out, it's really helped make it even more of an effective tool without giving up anything. But guess what? Because you're indifferent to price, you're prepared to take the next trade, be it up or down. Like if you're only trading one way, I find that those traders have a tendency to rush trades because they don't want to wait. Right? Oh, I only, I trade a handful of things, but I only trade them long and never a short trade in sight. Well, in order to be a complete trader and make money in both bull and bear markets, you have to learn how to sell short. But everyone's terrified of it. Well, if you're trading crypto, it's really not all that hard, right? A little tiny bit of lev, keep yourself safe. But if you follow your chart, like we're showing you, it's pretty darn simple. You're indifferent to price. You don't care if it goes up, as long as you're monetizing the chart because that's your only job, and when price goes down, right? We make this harder than it needs to be. Right? The only thing you should be thinking at when you're in front of your screen is what's on the chart. Now, even if these candles throw you a little bit, red, green, sideways, up, down, we can filter that. And we're simply going to use Heikin-Ashi candles to do this. And they are essentially filtering noise. That's what they're doing. But we don't read the T line and the 5 EMA any differently. It just helps take the noise off the chart and filter some of the nonsense. And for those of you that want just a one added level of validation, we're going to simply add parabolic SARs to the chart. And, you know, what are we waiting for? We're waiting for the first red candle to go short in this case, with no upper wick in a parabolic above price. And it just so happens that it appears on the same candle that our script gave us a signal, a confirmation signal. Could you have taken the trade up top here when the 5 started to sense that fade? Absolutely. Right? But we're big people. We can make these decisions. But if we want to stay textbook, that was your entry candle. But we do give you an opportunity to take the trade earlier. How long do I stay in the trade? Well, I don't think I need to tell you. I'm just going to show you. That's how long you stay in the trade, as long as there's that divergence. Even in here, even with this massive doji candle, right? The divergence stayed in place. It didn't change. So still down. Now, if you're uncomfortable because price is going sideways and you want to take it off, then go ahead. See the difference in how the chart looks? This is the noise we're talking about. Big moves up and big moves down. They scare the pants out of people. Interestingly enough, this candle here, as soon as I would start to see these two equal tops and then the candle start to draw down, I'd be shorting that thing. And where would my stop be? Probably somewhere up here. At least to kick it off. Once you're in profit, you'll lock it in. But we see this all the time, right? But the T line and 8 and the 5 were still diverged, so stay in the trade. It's really not that difficult when we take a step back, but when we're thinking too much, it's hard as hell. Right? What are you looking for on this this chart? You're looking for a solid green candle with a parabolic below price with no wick on the bottom. That would be your entry candle. And how do you catch these moves earlier? You just simply drop your time frame. That's all you do, because that's where you're going to pick it up. Right? When we showed this earlier. Okay, now let's look at one thing we look at on a weekly basis. I take these candles off, put regular candles on, where they are on, I'm sorry. It's the volume profile we don't like. And let's take the parabolics off too. Okay, what's on the chart? Well, T-line, 5 EMA, it's running our script. This trend line that's been here forever. And this is a daily chart of oil. Now we talk about this chart because it gives us this running history, not just in our time of doing the stream, but in its history of trading. It is the most valuable trade in the world each and every day. More money comes into the oil trade than really anything else. And you can tell a lot by just stepping back and looking at the chart. You step back, when I say step back, I mean get up from your chair and look at what you see there from 10 feet away and tell me it's bullish. Because people have been telling me it's bullish since September of 23. And I still don't see it. The chart doesn't lie. Charts don't lie. People do. There's two types of people in the world, I was once told. Lion tamers and lion be-somethings. And how many lion tamers have you met lately? The chart's going to tell you the truth, because it shows you what money is doing, not what people are saying. right? What does this chart tell us in the 12-hour oil chart? Showing you in real time what this volume gap means. And if you're not running a volume profile on your chart, it's included in the script that we run here, but you can simply grab one from TradingView's indicators. There's a real good one. It's called KV for coins, and it's in the community scripts. I mean, it's really good, and I suggest everyone run one. Real-time example of what can happen when price gets in the gap. And by the way, what's down here? The point of control. What level is the point of control at? $61.66. The level that we've had as a target, way back here. And look how many times we hit it. Probably on our way back down again. Because we know that's the 12-hour gap, right? That's what it wants. Current price will revisit past, and on the way down, what's it looking for? It's looking for the previous wave's low. The previous wave's low, I hate to say it, is way down at 55, or sorry, no, 51. So to be conservative, let's look for the base at around $60 here. That's a whole other conversation later, but that's what it would look for, is the previous wave's low. Will it find it this week? I don't know. It's Tuesday. There's several days left, but at this rate, it's not that far away, is it? Couple weeks? 3 weeks? Doesn't really matter. The trend has been consistent. And this is a real good demonstration that of all the drama that went on in the oil market because of all the geopolitical nonsense, what happened to price? Did it spike? Yeah. Did it retrace completely? Pretty much. And we see this in stocks too. Big impulses up, and then when everyone realizes that the world's not going to end, and price comes back down. But when you see these things, you can't help but chase them. But if you're going to chase them, make sure you're chasing them on the right side of the trade. And you don't want to be on the wrong side of it at all, ever. Right? And when you are, you get out. But this is just another example. Everybody was saying, hey, remember up here? Here we go. We're breaking out. What do you notice on the right side of your chart? As everyone else thought they were breaking out, sorry, pal, I'm going short. The chart was telling us exactly what was coming. How many saw it? I don't know. Not as many as you'd like to think. Because everybody wants to go long on this all the time. This is why technicals are very important, because they keep you out of the narrative. Right? Being stuck in group speak is not where you want to be. Whether that group speak is in a space, a Discord, your Telegram group, or in your own head. The chart does not lie. The chart was telling us to fade this green candle, that this was not a breakout. At least not yet. Do we have any idea what comes after one printed candle? No. We can only try and increase the probability of making the right decision, given the information that we have. And even with this chart, that 5 EMA was telling you, and the fact that it had shot down, right? points and flats. It shows you changes in direction, especially on shorter moving averages, because they'll pick up that change quickly. And then boom. Sorry, no crystal ball, no tea leaves, didn't read somebody's palms, right? This is what the chart was telling us. Now, if you're not running these two simple exponential moving averages, you won't see it. And if you're running them and you don't understand the relationship between those two averages, as easy and simple as they are, basically just two lines on a chart, if you don't understand the relationship between price, support and resistance, and its behavior, then it doesn't matter. But the people in here do. Now, this could have been a 5-minute chart. It could have been a 15-minute chart. It could have been a 4-hour chart. That, what you see there, was telling you something was up. Now, is the divergence still intact on this current candle that we see right on the right side? Yeah. Right? The greater the distance between these two, the more momentum. Still. Does that look bullish? No, it's not. And there's lots of reasons why it isn't. Those reasons are completely and totally irrelevant to me. I don't give a crap. I don't care. Do I think I understand why? Yeah, maybe, but I don't really care. And that doesn't factor into what I see on the chart. And if it does, it's in a much more, if I'm to weight it, 90-10. 90% technicals, sometimes 100%. But the decisions are based on what's on the chart, because you're getting a real-time representation of what money is doing and not what people are saying, which is one of the greatest takeaways you can have. Well, well, well. This is the Dow, and it's probably going to give us a funny-looking chart because it won't like the volume profile. Oh, we took it off. There we go. So we're going to use YM, which is the contract for the Dow, futures contract. This is today, Tuesday, Friday, there's Thursday. That was our last stream, right up here. Notice where price maxed out, the upper value range. Now, the volume profile, you should all know, is also dynamic, which means that if you're looking at a 1-minute chart, every candle, that volume profile may move a touch. Same would apply on a 5-minute, 15-minute, an hourly chart, whatever the case, right? So it does move. It's not fixed. But when price starts to tag a certain level and fails, at one point in time or another, when it doesn't break out, the pullbacks get hard. Here's one, right? Nice move up, though. Let's see where we come back to. Have we historically come back to the point of control, which is this? So there's your first tag at 45,133-ish. You retrace to where? Point of control on the volume profile. That's what that red line is, upper value, lower value. There's your next tag. And look, can you not see what's going on here? Right? Downtrend, uptrend. Nothing goes straight up, nothing goes straight down. Make money down, make money up. Make money down. Resistance, 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 and then it just starts to fade. Right? This is the one that gets your attention because If I blow it up for you, hopefully you can all see it. Your 5 EMA and T line, they look like one line, right? So you know you're totally you're just going flat, and it's just an accumulation. What you're looking for is this: when you start to see it arc the other way, right? Even though you got a buy signal here, look at this. That's how you know that was a fake one. But you know what? You wait even for your signal, and here you go. And now we're impulse down, sideways. Like, doesn't matter what I show you. We see this all the time on different time frames because everything is fractal, right? This is the simple stuff we were talking about before the stream, guys. Just to, how do you stay out of the weeds? How do you stay out of trouble? Simplify the chart and remember, this stuff is key. Don't fight this. If you're on the wrong side of this, get out of the trade. Right? That's basically what I do now, regardless of the time frame. Because all the hoping and praying you do isn't going to push price higher. Right? If you're long, you're on the wrong side of the damn trade. How hard is this to see? Come on. It's not hard at all. Right? And how many people try and wait this out? Too many. Why? You don't want to be wrong? Well, you're already wrong. You're just making it worse. If you're long and on the south side of the 5 EMA, then you're on the wrong side of the trade. If you're short and you're trading above the 5 EMA, you're on the wrong side of the trade. You want to be on the side that price is riding our filter, which is the 5 and the T line. Simple stuff. Simple stuff. And here we are, fast forward to today, and we're getting a little melty. We knew on, well, that was yesterday's candle. So we knew yesterday this was going to start to fade. Right? And what's going on? Well, can't break this level. Nobody wants to take it above here. You know that your point of control is way down here, and you know that you have a history of hitting it. So why would this be any different? You're going to you're going to fade this top at resistance, something that's proven to you. It's been resistance, by the way. It's not like you're making it up. It's right there in front of you. And you're short to the POC. Unless money comes in and reverses the trend. But as long as you're trading on the south side, just like this on the left here, if you're trading like that, you're short. This just gives you a target. Right? And the only other thing you're going to need to do is this quickly, you're going to want to know where the 20 is. And lo and behold, there she is, right in the middle of this first gap. Now, the reason you want to know where the 20 is, this could be Bitcoin. It doesn't matter what this chart is. You want to know because when price gets too far away from the 20, after a while, it's like the horse that doesn't like to be too far away from the barn. It's going to come back to it. It's important to you because you need to know as a trader, is this just going to be your short and then that's where you're going to exit because you're going to get another continuation? That's why you want to know where it is. Because every time you touch it, it just increases the probability that the next touch may fail. It's not a certainty, it's just increases the probabilities over time. But you want to know where that is. Because if you fail it, let me actually back that up. If you bounce and you start moving higher again, what are you going to want to do? You're going to want to take out the previous wave's high, which would be what finally takes out this level of resistance. Just like on the Bitcoin 4 hour. After a while, you know, tag it, retreat, tag it, retreat. It's the whole flowers and chocolate thing, right? You want to go to the dance? No, flowers and chocolate, try and begin, and hopefully you break through. But if we fail, what do we know? Well, we fail one level, we find the next. And there's the 50. In and around the point of control. So that would make you feel comfortable that if you were to fail this, you would end up somewhere down here, because this would act as a draw for price. And we know how much price likes to come back and see this level. And that's all we're doing. And, you know, if you wanted to take it a step further, oh, okay, so we throw the 200 on, and it's literally right in line with the 50. Again, acting as a draw for price. Right? Current price is attracted to past. And when you fail that level, you find the next. And current price will be again attracted to past price. That's what these moving averages are. And you can also pick them up, you know, in condensing your chart and just finding levels. Right? Now, some people don't like using moving averages. That's fine. Don't use them. I don't care. As long as you have a way of measuring price or levels of price, that's fine. Like if it works for you. This is just a methodology that I use so that I have targets to hit in ranges, because that's really what we're creating out of that. So this is becoming a little bit of a melty market. Now, do you guys have any symbols that you want me to check out today? Because this is looking like an interesting day.
I got one. What's up, Blunt? How you doing?
How you doing, Rico?
Doing pretty good. I sent you a DM as well, so we can set that up, just so we have that contact open. But I've been trading VANA. That one's been working out pretty nice for me, honestly. It's been doing pretty good. Been trading it on BYDFi.
Okay.
V as in Victor. So VA.
Oh, VA. Okay.
And A. Yeah.
Vanna, right? Is this it? Okay.
Vanna, yep, that one right there. Been doing pretty good on this one, actually. That's not the one. It's on BYDFi. Yeah, it's not that one.
I don't think they have a list yet in.
They have a Binance Perpetual one that I've been using.
How about that? Is that it?
I wonder where it looks like that on yours. Are you on the daily chart?
Yep.
Oh, okay. All right. Yeah, I'm trading it on a 15-minute candle. So I'm doing some just gap and go trades on this thing nonstop. It's kind of brand new. It's a blockchain. I got like zero fundamentals off of it. I was in my BY. Yeah, like zero. I almost don't care, to be honest with you. I saw a signal for it in my BYDFi, and you know, I've been using the 15-minute candle and actually been doing really good. It looks a little bit different on yours, which is interesting. Now that I'm sitting right here, I'm using the Binance Perpetual Hikinashi candles, but it looks different on yours for some reason.
Let's try it. Okay, 15-minute Hikinashis. See, it's working its way up into this gap.
Can you go to the tickers just one more time?
Sure.
Go to Vanna again. And then there's one like with a U. It's like U and USDT together. Okay, they all have that. All right. I'm not sure. It looks different on yours, but I've been trading this one pretty nice. It's had like, I guess today I finally did some fundamentals on it or whatnot and was checking it out, but it's actually been pretty nice because it just has a sporadic moment. So like for like lower time frame trading, like with the signal and the volume profile, it'll fill those gaps pretty fast. And I've been having some fun with this one right here.
No, same chart. Well, it's a real nice example of, these clean moves. So, this is Bitcoin. I thought it was Vanna, but doesn't matter. When you see stuff like this, guys, this sideways trading, these are Hikinashi candles. You have to know, that coming out of it, you're going to get a big move, right? Coming out of that sideways stuff, you always get the nice moves. And this one is actually kind of really hung on. That one did. VANA.
Yeah, I wish it was showing it how it was trading because it's an easy one to kind of. It's not. It's crazy because lately I've been saying it's easy. It's wild, but it's those damn volume gaps really make it a lot easier for me. But this thing on a lower time frame, it moves very volatile, so you'll have some really good chances to, make some good money. What is the price on this one? If you on the right side it says
495.
Yeah, that's definitely the one. But yeah, it's been breaking up to like $5.30 coming down, and I've been trading this thing both ways. Is I've not only been long in this thing, but like the minute it breaks out sporadically, I've been taking shorts on it as well, and the signals work really good, and it actually kind of respects just following the volume gap. So been having some fun with Vanna on BYDFi with this one. Not even that much leverage, and it's been printing pretty nice. I think I'm only 10x leverage on there, where usually I use like 50x leverage on Solana. But yeah, you know what's up.
Solana. There we go.
Yeah, let's check that one out. Good old Solana.
It's actually been a little bit flat, right? Like, it hasn't really done much.
That's why I moved to that Vanna, because it was like I was doing good, and I it's crazy. Dare I say this on live and whatever, but I was getting a little bit bored, and I needed some of that volatility. When you're sharp, you don't mind the volatility that much. You'll literally take advantage of it because if it's moving too slow, it's hard for it to fill the gaps. But when you see all that volume moving around, that's really where you get to see it, hit those volume gaps and really, fill them up for you and have some fun. So it was just moving so stagnant that I saw the BYDFi account. I have an account with them as well, and I have a signal group and stuff. And they had posted the Vanna one. So I was like, you know what, let me check this out, see where it's at. And it had entry at $5 and take profit at $5.30. And it literally did that exact thing. And then I shorted it from up there on Vanna and stuff. So it was like, nice. I was like, okay, I'm having fun with this one. It's cheaper and it's actually working out really good. So I gave Solana a break till it gets exciting again.
When you look at Solana and you see a wick like that, right? Like, you're going to want to short that wick, even without, just for the sake of that short on that. That's the thing about crypto. It spits out all kinds of stuff like that. And if you're on the wrong side of it, or even close to being on the wrong side of it, it catches up with you real fast, those moves.
For sure. I think something you said early on was, and then I got one more ticker for you, and this is kind of for my buddy, me and him, is a QBTS. It's a D Wade. My buddy trades this, and he has a six-figure bag. And he was, it just went up to $20, and we were all celebrating. We went out, and I did a little pullback to 14, and I seen him wearing it. I said, "Don't worry, bro, you're all right." Yeah, but this is QBTS, yeah, D Wade.
So this is here's your point of control down here, right? That's your lower value range. Here's your point of control where the move took off from, and if you were looking at the chart, like, you would know where those ranges are, and what it tells you is that there's gaps, right, on either side of the point of control. But this thing, it even gaps up the whole time. But look where it's retraced to. Let me just grab
it went up to like 1990 something. It almost hit $20. That psychological barrier, those round numbers, and came back down to 15 a couple times. Was testing it, and then wicked a little bit lower, like 1480 something. Then started to go back up, and it's come back down. I think it's at let me check over here. It's at like $15 now. Yeah, 1560.
Yeah, 1561. So I don't know if you can see this on your screen or not.
Yeah, I can see it.
There's a bit of a gap here on the volume profile, and the Fibonacci's are overlaid on top of it, so it might get a little hard to see. But 618 is 1127, which is kind of right at the bottom of the gap here.
Correct. Right at close to that $10 mark, that prior resistance becoming future support,
Yeah.
that round number becoming almost that new support level if it can hold it. I told him, I was like, you got to be stoic. I can't see you wearing it now because, if it keeps losing that $15 mark, it'll probably come down to, and I showed him that volume profile. I was like, the gap is showing and you see that little shelf right there where it comes out.
Yeah. And he's like, what? I don't want to see
It's right
that.
on. Exactly.
Okay. So this 4 hour, this is what we like about the 4 hour. So
That's clean.
I have a feeling this is going to be one of these failed breakouts, right? That rolls over, takes out this previous wave's low. That gets us onto the shelf, already kind of into the gap. So you can see where 618 is on the 4 hour. It makes a little more sense now, doesn't it?
Sure does.
When I take this off. So 618 is right here.
Yep, right on that shelf right there.
If this rolls over, takes out this previous wave's low, the next one it's going to look for will be down here. Right? That puts you right into the gap, and then we know how hard it is, right, to move higher when you're in the gap with momentum down. Here's a bench of past price that makes sense right along this gap. So, this connects this and this. Yeah, this is where it's going to go.
Yeah, that's what I was saying. But you hit it right on the money. What? I don't want to hear that.
Yeah, that's exactly. Yeah.
That's what happens when you're stuck in longs only. I've been there. I completely understand that. Where me, it's like, you know what, I'm gonna take that. But the thing is, he got in so early. Like at 6 something. So like he's still in the profit right now. That's not even funny. He has a large bag in it. So he thinks it's going to go a lot higher. It is some quantum computing stuff. So, it is, pretty bullish. I think he got in around $6 or something, $6.50.
Well, that's a good place to be. Right. This is the weekly. Say what you want, but it's still a bullish weekly chart, right? You have all of that divergence that's there still. So, and you're trading above the T line and the 5. So, still bullish, this chart.
Yeah, I gave him that. Well, I told him, I was like, we went out. I was like, we go chill at this one spot, bust out the laptops, and then throw these things in the trunk, and then go have some more fun later on. But we were breaking some stuff down where we like to go hang out, and with the laptops on, I was like, the good thing is if you zoom out, I was showing them this indicator, your indicator. I've been shilling it like crazy. I'm like, it's still, it's still bullish. It's still, hasn't broken that technically. So, when you zoom out, it's crazy how. Yeah. It's just a couple of red I've been using your phrase, Delatoshi knows. I say it's just a couple of red candles in the uptrend. Like, you got to be able to handle that.
Yeah. The people who were, accumulating down here are very happy. That's for sure.
He's ecstatic, especially when it went up to almost 20. I mean, we went out to celebrate because he got in like at $6.50 or something, and it's got over 6 figures in it. So, I mean, it was a crazy, crazy amount.
Yeah, sounds like kind of life-changing money, right?
Yeah, absolutely.
Let's take a quick look at XRP because I think that these ISO compliant coins are kind of getting their day in the sun anyways, at least for now. But, just like on that other chart, there's a lot of people that just accumulated and good, look, they believed in something, right? Just like the Bitcoiners, whether we want to diss what Bitcoin is or isn't and all that stuff. You know what? They had conviction. They stuck to it. Same with these XRP people. And you know what? It paid off for them. Does it always work? Not necessarily. But I think in the XRP case, it was always strong. Once you got past all of the lawsuits, I think the use case and business case for XRP was pretty clear, which is, for some others, is always hard to distinguish. But for XRP, I think it was pretty clear. And it looks like someone believes in it. Has it been range bound a little bit? Yeah. right? Yeah, it has. But that's to be expected after a move like that.
I will say, Blunt, that obviously with the markets pumping up lately, and I've been going out and kind of celebrating myself. I mean, it's like it's the writings on the wall. We're in this new .com moment, and we're not only watching it, but we're hoping to build it for some of us. But I will say the one thing that I like about XRP is that when the crypto conversations do come up and there's normies around, that's the first one they bring up. Like that's I've talked like this last week to like probably like 5 different individuals, and their first thing that they brought up was XRP. So it's like XRP has now become a bit of a lore, within having everybody gravitate towards it and stuff like that, because the normies are talking about it. It's the first one they bring up.
Yeah, and there's a few others. There's a weekly for just to give you an idea how long these people were accumulating. Like we're talking years and years. Like I'm sure there's a lot of XRP investors that are really, really loaded up on this thing. XLM is another one, which is stellar. And, none of these really seemed like they were super sexy. And I think maybe that's kind of been a blessing in disguise for them. They didn't get caught up in that kind of crazy crypto talk. There was always a well-defined use case for these things. And again, I think, they're starting to show that they're getting their time.
For sure. I'm a big fan of the X tokens. That's why XPX even has the X. Most of the X, like XLM, I was a really early investor in this. I did really good in it. I could have even did better if I would have just held. I know that's like everybody's story, but I was super early in on XLM, where I still did tremendously well on it. But, look at how it's doing now. But that's one of the reasons I like even XMR. I was an early investor on that and did extremely well because I got in at 2017, right before everything pumped in. And there was you had your XRP, your XLM, your XMR, and these were all things to do with essentially, the idea of payments and things like that. So I've always been, around the idea of what's going on with payments. And a lot of these X tokens are, these payments. What's this, XDC?
Yeah. It's another one that's kind of had it's getting its day, right? Can you, some people might not be aware of what XPX Pay is. Can you maybe for their sake just walk me through?
Yeah, absolutely, bro. And I appreciate you giving me this chance on the platform. So XPX focuses on all things payments, allowing people to spend their crypto in the real world. We've actually turned it up a notch by not just allowing individuals to off-ramp their crypto and use it in the real world, but also allowing businesses to accept crypto. And now like this last month was the last 2 months was a really hard push on finalizing the payroll sector. So where businesses can now accept cryptocurrency, but also pay their employees that want to get paid in crypto through the XPX Pay portal. So the main focus of XPX Pay is to remember the Satoshi Nakamoto white paper, the fundamentals of that, which is a electronic cash system. And we're focused on all things payments, the fundamentals, the bone marrow of cryptocurrency, what it's supposed to be about and where it feels tangible. And I think it's important for us to be part of that force to like build a bridge for retail. We have a limousine business, we have a smoke shop, we have a car dealership. So we have quite a few, businesses already using our pay portal infrastructure because we already know this is going to be a way of the future. So whether you're an individual that wants to off-ramp their crypto and, whether the markets are green or red, you still got to put gas in your car. So put some crypto, off-ramp some crypto, use it on a card, use it in the real world and, kind of fulfill that crypto dream. So all things payments for individuals and businesses is XPX.
So people can pay like their gas bill, like for their house and their taxes and stuff?
Yes, you can pay your bills as far as like your gas bill, your electric bill, your cable bill. You can do these actually non-KYC as well in 10 countries. But right now I pay everything with my XPX Visa card, like everything that I do in my life for the most part. I stopped using all the other ones that I had. This is my main one because it's just straight from your wallet, straight to your dashboard, and you get to use it in the real world.
And then how does a business pay its employees? Is it all tax compliant? It would have to be, I guess.
Yeah, they would have to actually self-report because so they would have all the documentation. But that's the best way to do it is through the portal because you have all this access to these tools to be able to say, "Hey, I've been doing this." Like right now, we're talking to shout out to Jesus Coin. You guys know probably Jesus Coin. They pull up to the live streams quite a bit, and he's a church, and we're almost done with all that stuff, pushing that through. But somebody like him that has all their compliance now. Now they're a nonprofit. They can use all this documentation. Like, hey, we've been receiving these charitable crypto donations. We've also been using some of this to do payroll, and they'll have all that documentation so they can self-report.
Wow, I didn't know we got that far. Like I knew we were kind of paying bills and stuff, but I wasn't really sure about the other stuff. So, well, good for you. Like I know you worked really hard, and I think you've actually pushed this XPX to the next level. So good, really good for you.
Thank you, bro. I really appreciate it.
Rico and Blunt.
Yeah, what's up, brother?
And one of the biggest things that I've noticed with XPX is, for introducing newer folks to DeFi, to crypto. One of the beautiful things that I've come to realize is within our own ecosystem, we have a project which is XPX that allows them to off ramp. That is going to speak volumes in itself, just because it seemed so complex before. Now they don't have to travel to different sites or different swaps to do the to change it out, but the ability to offload it to a card, and it's just seamless. So I think that in itself is just it's incredible. The tech behind it, obviously, with everything else you're building, just don't want to lose sight of that. Just the ease of sharing with somebody in the event they needed to turn it to cash for whatever reason, any kind of emergency. The ability is there. The tech is already built, and that's game changing. Is there other ways that you can off ramp? Is it just the physical card?
No, you can off ramp with the physical card, the virtual card, and now with the gift cards. I think what's cool too, bro, like you were saying, Delatoshi, is like it's easy to get people to wrap their minds around crypto because they have a Visa card, so it's like really easy to transition. And a lot of this stuff is not priced into XPX. Like I had one of our investors that flew out of the country. He used the ATM in the States, can pull cash out, but went to another country where they did pesos. It's like I went to Mexico where you got to go and give them cash and do that exchange stuff, where XPX, you can just do it straight from your wallet, load your account. And like if you're somewhere where you use the ATM in another country, there is a 2.7 conversion rate, but at least you don't got to go stand at some sketchy place in some town and convert all your dollars into pesos. You can just go to ATM really quick. You don't have to stand in some kind of long line, and just withdraw straight from the ATM. And whatever country you're in, it will withdraw that local currency, which that's not priced in, and I want to give a shout out. We're live on Blunt's broadcast, and I know there's people listening on X. I want to give a shout out to Smart DeFi. If you guys can go to smartdefi.com, because it's really given XPX an edge. There's always going to be Pepsi and Coca-Cola as far as, other card providers and things like that. But the fact that you can take a loan out against your XPX tokens and then off ramp it onto your Visa card, or really any SD token, right, that has asset backing in their tokenomics. The fact that you can take out a loan and within the same ecosystem, essentially, because we're part of this thing, man. And off ramp it onto, because not everybody taking out a loan wants to be a degen and go invest into something else. Somebody might be using Smart DeFi lending protocol to take out a loan because they need to fix a flat tire or their alternator messed up, right? And they don't want to lose their position. So they take out a loan, and XPX allows them to, off-ramp that loan onto a card. That's not priced into XPX. That people are not talking about this in spaces and stuff like that. So I want to give Smart DeFi a big shout out because it gives us a really competitive edge in the fact of the way that we tailored this all together with SD and payments together. They really go hand in hand.
No, it's very cool. And speaking about loans, what you're looking at is actually the monthly of the 10-year. And it's something that we've talked before about, and I believe we talked about support and resistance levels, and you know, you'll approach them and approach them. Here's one. We talked about this. Our good friend Joe G and I, we picked that one like ages and ages ago when everyone thought we were insane. But why? Because of this. Right? And I think now we're shooting for it now. And if we go to the weekly, I think we get another, you know, we're getting a buy signal on the 10-year at 4.48 roughly. And what does price want to do? Doesn't matter if it's the 10-year, if it's oil, or if it's a stock or a crypto. This move higher wants to take out the previous wave's high. And assuming it does that, it's going to want the next one as its next target. And let's say it accomplishes this. It might take a little bit of a breather, right? But we'll watch the trend, right? Notice our 5 EMA went white, right? What's it telling us? Well, there's an influx of money coming in, right? This candle, see this wick and then this little body, it looks like a little hammer. It's not quite, but close enough, was enough to change the trend. Price, the divergence kicks in, price starts trading above the T line and the 5 EMA, and then boom, there's our confirmation candle. Remember, this is the 10-year, the bonds. And what does it mean when the price of the bond goes higher? They're trying to make it attractive for people to buy it, which is a whole other conversation, right? But it's something that we watch in here, and, you know, there's a reason why. If you're looking at your daily chart, you're not too concerned about it. Right? It feels like a long way away, but it's not. Start of your daily trend, right? What do we talk about? Fractals, different time frames. What you see on one time, you'll see on another. Right? If we back this up to a 4-hour, for example, we would have gotten an earlier signal on when all this was kind of changing. Probably right down here. Right? But, you know, we have two clean signals. A little bit choppy, but nevertheless, we had a heads up. This is just, now we're starting to see the buy signal on the weekly chart. Saw it on the 4-hour, showed up on the daily. Here it is on the weekly. What do you think that's telling us? It's telling us it's going higher. The problem is that most people have this kind of while we were sleeping thing going on, and they don't wake up until it's 4.8 or 9 going, holy crap, 10 years, almost 5%. Well, yeah. It's been going there for a while. Right? But we can't help those people. At some point, they got to help themselves. There's nothing magical about what we do here. Whether these things are new issues of crypto or stocks that have been around for 100 years, they still will perform, or the price will behave, rather, the same way. Doesn't matter if it's crypto or a commodity or a stock. Right? It doesn't matter. Here's IBM, right? One of the old, kind of like your grandfather's company, right? This is your stock your grandfather would want to buy. Maybe even your grandfather's grandfather. My God. But you know what? The way that price behaves on the chart is exactly the same. Gap down. Actually, you tag the lower volume profile again, but 5 short-term time frame senses the influx of money, gives you the early signal. There's your confirmation. There's your divergence break. Price go up. Oh, you get scared down here. You want to take it off? That's okay. Right? There's nothing saying that you can't get back in again when price wants to move higher, which is what it did. Gave you a real clear signal. all the same stuff just repeats. Divergent kicks in, you trade above the 5 and the T line, and all of this chop gets filtered out, right? Fibs, fractals, and filters. We're filtering out all of this noisy stuff, right? All of this stuff. We can make judgments call. We're grown-ups. We can make those calls when we're up here. But you don't have to get scared when you see these red candles in an uptrend. Or if you're short, the green ones in a downtrend. But when you're indifferent to price, you don't really care, right? It's when you're holding something that gets conflicting. But when you're indifferent to price, you just follow the chart, right? IBM is behaving just like any other asset that we watch. Fall into this gap, you're probably going to find the upper value range. You don't hold it, the point of control. Why is the point of control such a draw? Because it really is averaging a lot of past. And current price is attracted to past. And as long as you have a downtrend, that downtrend candle is looking for past price. Could find it in here, could find it in here, or it could find it at a major moving average, which it actually broke, right? So there's your breakout. Here's your first touch. First touches typically get support and move on. This one did, except this second one didn't last at all. So now that you've broken one level, and now you've got the divergence in the T line and the 5 EMA, you're looking for the next one. And there it is, the 50. And where's the 50? Right in the middle of this gap, which is already identified because of the gray as really light trading. So the chances of it finding it are actually pretty good. Time and price will come together and they will meet. Why is this important? Because these are targets for you. And understanding where the money has and hasn't been helps you understand how much risk is involved and what is the probability of that price actually reaching its target. Because if you're short and you know you're going to fall into a gap, or you see the likelihood that you fall into a gap, my conviction is stronger in that case that it will find my target either here or here. All right? But again, I think less is more, right? If you guys are struggling with what you see on the chart, as in it's a lot sometimes, strip the chart down, like basically to what you see here. And I think the volume profile is a must-have, but strip the chart down just to the T line and the 5 EMA. And if you want to simplify the candles, do that. Like whatever makes you comfortable. Right? Does that take a little more noise out of the chart? Absolutely. And that's okay. Some of the best traders I know actually use Heikin-Ashi candles on a regular basis. And they have great success with them. And if you just want to, again, add another level of safety and confirmation to what you're seeing on your chart, remember that if you're trading the Heikin-Ashis and you want to go long, so we're looking to the bottom left here, you're looking for a solid green candle with no lower wick and a parabolic below price, below the candle. Here it is. That would have been your entry candle in this case, and then there would have been our confirmation. So you would feel pretty good. Plus, you would have already seen that your 5 EMA had turned white, telling you that there was money coming in. So you would feel pretty good about this. And you just ride it up until it flattens out or softens, right? That's a nice run on a daily chart. You should be very happy. And a little consolidation, and it all repeats. And now you're in a downtrend. Where was the entry candle? Up here. First solid candle, red candle with no upper wick and a parabolic above price. And then our confirmation came here. So yeah, sometimes they're a little bit different, but the end result was still the same. This was quite early, and I don't think you really would have gained much, but ultimately, that's where your confirmation came in here. So this is just simple stuff. The less is more thing. When you need to add in a moving average, maybe just to get an idea of, geez, where have things been? Where's that 20? Because, if I'm short, it could bounce in and around there. And in this case, you would have seen that you actually failed it, this is your perfect entry candle for me. A failure of a major moving average with a confirmation, a double confirmation really, with two different methodologies. Yeah, I'd short that all day long. And that is one of the things I like about meshing the Heikin-Ashi methodology with my script and stuff, because when you get things like this, they're slam dunk winners. I love that. So, any questions today, guys? And I think we kind of slowed it down a little and kind of peeled the onion back and tried to, again, keep things a little on the simple side. So,
No, all good, Blunt. Appreciate it, man. I got a live stream I'm gonna do and then go head into space. So if you guys have some time later on, if you guys around about an hour and 15 minutes from now, there's an XPX space. I mean, shill that indicator. I'll shill it for you anyway. I've been shilling it nonstop, man. But
well, I'm glad it works.
Yeah, but we're gonna have a space. It does. I swear by it. I mean, like you said, like, what's nice is like, it's cool. Like, since 2017, I've been using the parabolic SAR. So like, I'm very familiar with like the trend and stuff and using it. But like when I've added all these other things together, it really is like just been really powerful. I think the volume profile is extremely underrated. Everybody should have that on their chart to fill gaps. And, then you start adding the other things that work for you. And everybody's mind is different. So, some things might work for somebody that doesn't work for you, but, find a method that works for you, test it out for a month. Like I've been telling people, I dare you to give yourself that opportunity to, find a method, a strategy that you trust, and just try a demo account for a whole month. I dare you. And like, see what you can do. And then after that, maybe do something with it.
No, you're 100% right. And, when you watch charts long enough too, especially in crypto. So for example, we have our Bitcoin chart up here. It's the daily and it's down 1.97%, 2365, it's down. Most people, if you were trading any other asset in crypto, you would have half an eye on the chart you're trading and the other half on Bitcoin, because you're kind of in the belief that price will always follow Bitcoin. And quite often it does, but it doesn't do it in the way that we expect it to all the time. And then there are times when other assets just want to defy it. And this ETHFi thing is one of those assets that I've often traded, as you guys know. And it quite frequently does not do what Bitcoin does. And today's the perfect example. It's up almost 6%. And, Bitcoin's down almost 2%. So if you were eyeballing your one chart while watching Bitcoin, it would be confusing, right? So like if you went short thing because Bitcoin was falling, you'd have a problem, right? So that's why it's really important to focus on the chart you're trading, right? Not the leader in the category or sector or market. Sure, it's always worthwhile knowing what they're doing, but don't marry your trade to it, especially in the crypto space. Like, don't marry everything you do to what Bitcoin's doing.
There used to be this amazing site that Kraken bought out, and I even emailed them. I was so butthurt over it. It's a term on the West Coast, being butthurt. But it was crypto.watch. And oh my God, it was so amazing. So many tools. That's why Kraken bought them out. They were around since and that's how I learned like a really good amount of solid indicators, because they only had a select few, but it was like the ones that they saw that worked and stuff. Yeah. And one of the tools that they had was like this thing that you could put in what moves with BTC and what doesn't, right? Like it'll show you like a graph, and there's a lot of them that some people might think moves with BTC, but actually they move the opposite. They actually move like the US, like the stable coins. When the stable coins are kind of going up, they're more like, I don't know if they're associated with more stable coin stuff, but you'll see a lot of plays that when Bitcoin's going down, they're the ones going up.
Yeah. I've just seen kind of people get victimized by the Bitcoin watching thing. And it can be a little bit dangerous, right? Like, focus on what the chart is saying. The chart's not going to lie to you. It's telling you what it's doing. It might do it with some emotion from time to time, but it's going to tell you what it's doing. This is ETH. Like, ETH is kind of, is it just me, or is it just you don't hear as much about it as you used to? I don't know. It could be just me. Maybe the layer ones are sucking the air out of the room, but ETH's chart has been plugging quite nicely lately, quietly.
BlackRock's loading up nonstop.
Yeah.
I think ETH is gonna, ETH was always relatively close to BTC, and then just like BTC ripped away. But most of these smart contracts are built on the Ethereum network. Nobody can discount like how much is built. The reason that we have this whole sensation of launching projects and all these different smart contracts is because of Ethereum. So it has this significant value in the space, just like Bitcoin does.
Yeah. And this is the daily chart, and again, you actually had a couple days heads up on this signal here that something was cooking. And what does price do? Takes out the previous wave's high. Right? This is what we talk about all the time. What's it going to want to do when it changes direction and moves up? It's going to want to take out the previous wave's high, and there you go. Same thing on the way down. Right? Eventually, it'll want to take out the previous wave's low, which will be here. Nobody wants to talk about that, though, right? Nobody wants to talk about that, or if it fails, that it has to take out this, right? You ever notice that when price is going up? No, we don't want to talk about retracements. We don't do that here. We only the price just go up, right? We don't worry about that.
We don't worry about that. Yeah. I know.
But
I do it. I tell people like, hey, you better be a big boy and understand that if price comes down here, there's a gap that it will fill that gap. I don't want to see nobody moping around because you guys are shocked that price came back down to where it's been before. Okay, this happens. It's fractal. Have you guys not read the fibs and fractal paper yet? What's going on? No.
Well, and look, even if you weren't running the volume profile, is all you would have to see on your chart is this to know that that's the sign of a huge sucking sound if you fall into it. Like these big green candles here, they're just filled with fairy dust, air, and exuberance. And when price comes back to and retraces them, there's nothing in them to hold price up, right? And that's why it cuts down into them so fast, and then, in all likelihood, would find a resting area down here somewhere where the shelf is. But you can learn a lot just by knowing where these gaps are, right? They are, like, I know you're doing it. You can literally trade in and out of them.
It's wild. It's almost like if they knew we were doing this, I don't know how it's allowed, but everybody, that's what we're supposed to be doing, is doing these gaps. Yeah,
it's true. But
well.
Yeah, listen, I know you've got to go, and I've got some things to do this afternoon too, so I'm going to cut this one. But if you guys have any other questions, fire them out before we head off. If not, we will do it on Thursday.
Sounds good, brother. I'll see you on Thursday, man. You guys have a fantastic day.
And you and I will connect, Rico, and we'll do a stream together.
For sure. We'll probably even do like a giveaway on this stream, so we make sure we have a lot of people there.
Sure.
And I'll do like some kind of giveaway, so like that we can force people to absorb some of this wisdom that you're giving away for free in the space. It's like I'm have to lure them in to learn something good for themselves. It's crazy, but I'll do it for the space.
You know what? The thing is, Rico, is it doesn't sound sexy when you're telling somebody about it when they've never really heard it before, right? Plus, it's a little intimidating. There's things and terminology, and it's just a lot. I get it. But as soon as people realize that they can make money and it's actually not as hard as they thought, they're like, I'm all ears now. Like, forget all the other stuff. I get it. Okay, tell me. Right, so...
Thank you, Blunt. You have a fantastic
Okay, have a great day, everybody. We'll catch you on Thursday, and we'll see where the market is in 2 days, and based on what's going on.